Welcome back to Alpha Recap. I'm glad you tuned in. Today we unpacked a pretty eventful session after the close, with punchy volume, private credit headlines, and a cluster of shareholder lawsuits. As always, if you have questions, you can reach us at stockalpha.ai.
Hey everybody, good to be here. Markets closed with some concentrated action in big names and quieter but meaningful moves under the surface. Lots to get through, so let's dive in.
So what really stands out here is momentum in one big name and how that rippled out into ETFs and small cap hedges.
Right. Nvidia led the headlines today, finishing the day up about 2% to around $211.50 on heavy turnover.
And the volume was meaningful. Roughly 166 million shares changed hands. Analysts flagged that the move felt momentum-driven, rather than driven by fresh company disclosures.
Which means liquidity was there, but so was the potential for sharp follow-through moves if sentiment shifted. Momentum can feed on itself, for better or worse.
When you step back and look at this, Nvidia's action tied into the broader AI narrative. Hardware demand, data center spending, that whole stack.
Yeah, that tracks. And it wasn't just Nvidia. The Bitcoin futures ETF finished down about 1.8% to roughly $10.96, with heavy volume too. About 127 million shares.
Right. And the other thing is the leverage inverse small cap product. Direxion Daily Small Cap Bear 3X popped, finishing up about 5% at about $4.72 on very heavy volume, around 315 million shares.
So we had heavy participation across a few correlated products: big cap tech, crypto-linked ETFs, and short or hedging vehicles for small caps. That kind of concurrent volume can crank up intraday gamma and make moves more exaggerated.
Honestly, I was a bit surprised by this one. Large flows into those products suggest tactical positioning, short-term hedges, or traders rotating risk on and off.
Exactly. And when momentum drives a name higher without fresh fundamentals, it can create a feedback loop where correlated instruments follow, for better or worse.
Switching gears, there was a cluster of law firm lead plaintiff notices today that we need to flag.
Yeah, Grocery Outlet, Atara Biotherapeutics, Hercules Capital, and New Era Energy and Digital all had notices circulated inviting eligible shareholders to seek lead plaintiff status in securities fraud suits.
Lead plaintiff appointments matter because they centralize litigation strategy, which can lengthen timelines and raise legal costs. In plain terms, it can be a new source of volatility for those stocks.
Short reaction, big move.
Motivated traders and plaintiffs' lawyers pay attention to these notices, so you often see a bump in trading volume. Not because the business fundamentals changed overnight, but because event-driven players are reacting.
What to watch next? Motions for lead plaintiff selection. The dockets for initial case management orders. Any 8K disclosures from the companies. And whether the SEC starts sniffing around.
Short reaction. Not what anyone expected.
True. Multiple notices in one day might just be coincidence, but analysts note it could reflect heightened scrutiny on smaller names, something to bake into downside risk scenarios.
On the credit side, Goldman Sachs reported a private credit vehicle markdown of 3.7% to net asset value, which got a lot of people's attention.
Private credit marks are tricky. Valuation opacity and mark-to-model risk. A markdown like that can pressure reported NAVs, and in some cases, can influence redemption dynamics or liquidity decisions among limited partners.
Right, and continuation vehicle news showed up too. Trispan closed a single asset continuation for Mammon. Those vehicles give existing limited partners liquidity while letting the sponsor keep control of the asset.
Which is basically a pragmatic response to exit frictions. If the sponsor can't get the price they want in the public markets or to strategic buyers, they create a vehicle to keep the asset and keep plotting an exit later.
When you step back and look at this together, the Goldman markdown and the continuation vehicle highlight that private markets still wrestle with liquidity and valuation timing.
What to watch? Any follow-up from Goldman on valuation methodology, whether peers start reporting similar markdowns, and disclosures about the economics and exit timeline for the Trispan vehicle.
Let's flip to the AI, cloud, and software side. There were some interesting ecosystem moves that tied back to Nvidia's story.
Beaver Atlas showed momentum as an open source and enterprise living wiki for chat platforms. Think Telegram, Discord, Teams, and Slack. The dual open source plus enterprise model could speed developer adoption and enterprise recurring revenue.
And Calent picked up a Gold Globey Award for AI Service Provider of the Year, which is an endorsement for their AWS partner positioning. Awards like that can help with credibility among enterprise buyers.
Right. The connection back to Nvidia is simple. Hardware demand drives opportunity for integrators and developer tools, and vice versa. Software adoption helps monetize the compute cycle.
So what really stands out here is the cross-layer activity. Hardware, manufacturing capex, integrators, and developer tooling all showed movement today.
Yeah, absolutely. Keep an eye on GitHub activity and enterprise deal announcements for Beaver Atlas, and client wins or case studies for Calent. Those are the things that translate reputation into revenue.
On manufacturing and industrial capex, Sterlite Technologies announced up to $100 million in planned U.S. investment to boost capacity for AI-ready infrastructure and advanced connectivity.
CapEx like that ties directly to the AI demand pipeline. More fiber, cables, and connectivity components means fewer supply constraints for customers building data centers and networks.
Houston-Boston partnership also expanded its Goodyear network to 5 Houston locations and flagged leadership in rollout items. Small regional expansions like that matter for local margin flows.
Right. And what to watch with Sterlite is the CapEx breakdown. Where will the money go? Timelines for production, and whether they already lined up customer contracts.
Quick sector briefs. Labor actions at Breakthrough Beverage. Over 100 drivers and warehouse workers launched an unfair labor practice strike in St. Louis. So watch for NLRB filings and distribution impacts.
Healthcare milestone. Memorial Care Long Beach Medical Center marked a 15-year milestone for its interventional neuroradiology program, an operational signal that can affect regional referrals.
And in industrial chemicals, Markets and Markets projected the maleic anhydride market to reach about $3.79 billion by 2035 at roughly a 7.6% compound annual growth rate. Feedstock costs like N-butane and benzene will drive margin sensitivity.
GVFL led a $3 million round in Antier Solutions to scale enterprise blockchain infrastructure. Early stage, but could foreshadow partnerships for public fintech infrastructure vendors.
I mean, when you step back and look at this, labor disruptions can be a short-term operational shock. And with credit valuation in the spotlight, those shocks look bigger than they might have a year ago.
Short reaction. Hold on. Say that again?
Just that operational issues plus mark-to-model caution can create outsized pressure on margins for exposed firms. It's all connected.
Let's quickly summarize patterns we saw today. First, AI ecosystem activity was cross-layer. Hardware, capex, integrators, and developer tools all showed movement.
Second, the Goldman Sachs markdown and continuation vehicles underscore mark risk and liquidity friction in private markets, something credit-sensitive allocators are watching closely.
Third, clustered securities fraud notices for several small and mid-caps highlighted litigation as a live idiosyncratic risk, and that tended to amplify volatility for the affected names.
And fourth, heavy ETF and large-cap tech volume pointed to elevated liquidity and intraday gamma that can intensify moves across correlated sectors.
So, what really stands out here is how interlinked these themes are. A hardware rally can push integrators, which feeds capex decisions, while credit and litigation dynamics tug on risk premia from the other side.
Quick checklist of what to watch tomorrow. Court dockets and lead plaintiff motions for Grocery Outlet, Atara Biotherapeutics, Hercules Capital, and New Era Energy and Digital.
Also, any follow-up commentary from Goldman Sachs on valuation methodology and whether other private credit managers flag similar markdowns.
And market movers. Nvidia directional follow-through, plus ETF flows for the Bitcoin Futures ETF and the leveraged small-cap bear product. Volume will confirm whether momentum holds or mean reversion kicks in.
Don't forget Sterlite, capex disclosure details, timing, facility locations, and any customer contracts. And updates from Beaver Atlas and Calent. GitHub activity or client wins could be early indicators of commercial traction.
Short reaction? Yeah, that tracks.
Finally, labor developments at Breakthrough Beverage. Watch for union statements, NLRB filings, or company notices indicating strike duration.
Takeaways. 1. AI momentum remained the headline, but was clearly driven by flows and sentiment as much as fresh fundamentals. 2. Private credit marks are a reminder of valuation opacity, that 3.7% markdown mattered beyond just one fund. 3. Litigation notices are non-trivial catalysts for volatility in small and mid-caps. And 4. Heavy ETF and leveraged product volume can amplify moves across correlated assets.
A quick reminder, this episode is informational and analytical only. Analysts note risks and possible outcomes. None of what we discussed is personalized investment advice, and we didn't recommend buying, selling, or holding any specific security.
If you want to dig deeper into any of these stories, head to stockalpha.ai. And if you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back tomorrow with more recap and reaction after the next close. Take care out there.